Hey everyone, today I'm breaking down a fundamental concept in finance: liquidity. So, what exactly is liquidity? In simple terms, liquidity refers to how quickly and easily an asset can be converted into cash without significantly affecting its price. Imagine you have two assets, a savings account and a rare painting. Your savings account is highly liquid because you can access the cash almost instantly. The rare painting, on the other hand, is not very liquid. It might take months to sell, and you could end up selling it for less than its market value. Now, why is liquidity important? For investors, liquidity is crucial because it impacts the ability to enter or exit investments. High liquidity means you can quickly buy or sell assets with minimal price changes. This flexibility is essential during market volatility. For businesses, liquidity is key to maintaining daily operations. Companies need liquid assets to pay their bills, salaries, and unexpected expenses. A lack of liquidity can lead to financial strain or even bankruptcy. There are different types of liquidity to consider: market liquidity and accounting liquidity. Market liquidity refers to the ability to buy or sell assets in a market without affecting the asset's price. Accounting liquidity, on the other hand, measures how easily a company can pay off its short-term liabilities with its short-term assets. A common way to assess a company's liquidity is by using financial ratios like the current ratio and quick ratio. The current ratio divides current assets by current liabilities, giving you an idea of a company's ability to cover short-term obligations. The quick ratio is more conservative, excluding inventory from current assets to provide a stricter assessment. So, next time you're evaluating an investment or a company, don't overlook liquidity. It's a crucial factor that can make or break financial decisions. That's it for today's quick guide on liquidity. If you found this helpful, hit that like button and subscribe for more finance insights. Thanks for watching.